And then the one
Chairman.
I'll come back to.
I call the Honourable Member Sua Williams-Sio.
Thank you, Mr. Chairman. I'm a rugby player, Mr. Chairman. Loved playing rugby, playing rugby league. And when I played in better times, when I was a lot fitter and stronger, I used to love selling the dummy pass. And I was good at it, Mr. Chair. I was good at selling the dummy pass. And as long as I had somebody to my side, I could show the ball, flick it, pretend I was flicking it, and would suck in the other side and would always get a score. And I used to love that. But I hated it when somebody else did it to me. And I'm using that analogy, sir, because I'd like to suggest to this House that when it comes to the economy and the taxation restructuring, we've been sold many, many dummy passes by this government. I mean, the tax switch, where 10% of the highest income earners received over 40% of the tax cuts, and somehow, dummy pass at all, dummy pass again, and we were told that somehow those wealthy people would invest their money, jobs would be created, and somehow the rest of the nation would receive the benefits of the tax cuts that went to the rich. Well, the reality, sir, is we've got high unemployment, high cost of living, families are struggling. You look at the GST. Before the election in 2008, we were sold another dummy pass. We were told GST would not increase to 15%. Then it was increased to 15%. And then we were told that no one would be worse off. Well, the reality, sir, is the highest 10% pay 7% of their income, after-tax income, as a portion to GST, whilst the lowest 10% of earners pay 10 times that in GST as a proportion of their after-tax income. And so with this bill now, the proposal by the government to abolish gift duty, this is another dummy pass that we've been told. Supposedly because it only generates 1.5 million, but the reality is they're doing it because it imposes a high level of compliance cost on the private sector. That's their wording, sir. So we've been told another dummy pass, sir, that somehow, again, this is good for the private sector. And I would say, sir, well, let's be quite clear. Why is the gift duty imposed? Because it's to prevent tax avoidance and structuring. So when we remove gift duty, that opens up our economy, sir, to tax avoidance and structuring. And I want to say, when you listen to the New Zealand Institute of Chartered Accountants, they outline that a number of tax avoidance opportunities will arise in the absence of gift duty. They include ability to split income with people on lower incomes, ability to transfer income to loss-making entities, ability to transfer assets in order to meet minimum thresholds for the financial arrangement rules and the foreign investment fund rules, ability for someone with a tax liability to divest themselves of the means to pay and then to claim hardship, and ability to make charitable donations while others, so that a higher tax rebate may be claimed. So that's just, it's mind-boggling. We've been told that this is going to be good, whereas you've got the New Zealand Institute of Chartered Accountants, outlining that the tax avoidance opportunities will rise as a result of the removal of gift duty. You have the regulation impact statement by the IRD officials who say it is not possible to determine the extent to which gift duty alleviates issues such as income tax minimisation. Otherwise, the removal of the gift duty will give rise to tax avoidance. Not too long ago, I asked the question of the Minister of Revenue, what was the total amount of company tax, if any, written off by the IRD for each month since January 2009? I would say, Mr. Chair, this is the answer I got. In January 2009, $9.8 million company tax was written off. March 2009, 30.7 million company tax written off. May 09, 8.9 million. June, 38.8 million. July, 12.2 million. And so the list goes on to June 2011, 11.758 million. Mr. Speaker.
I call the honourable member Amy Adams.
I move that the question be